In 2021, the strongest performers were Layer 1s. Layer 1s absolutely overtook the market as there was a flood of new applications building on these new and exciting protocols. In today's show, I'm going to be running through the top 5 Layer 1s and doing an ultimate comparison for you guys, looking at the data, the transactions per second, the time to finality, the market caps, the price performance to verify which Layer 1 in the market has the most upside. We're going to be starting with the top 5 in today's video. As you can see, we have the total top smart contract blockchains listed here on CoinGecko. We're going to be going through the top ones in today's video and looking at which one may be the best play headed into next cycle. And some of the revelations I found were revealing. Let's get straight into the show. The first one we have to start with is obviously Ethereum. Now, Ethereum is the ultimate comparison here because it is the first Layer 1. It is the one that everyone knows, and it's the one that most institutions are investing in. So when we talk about Layer 1s, oftentimes we do compare them to Ethereum because Ethereum is essentially the gold standard of what a Layer 1 should be. Now, it isn't necessarily a gold standard due to its technology, but it is in terms of its adoption, and it does have the first mover advantage as a unique selling point to the Ethereum blockchain. So essentially, Ethereum is a distributed blockchain computing platform for smart contracts and decentralized apps. Ethereum, like all smart contract platforms, allows you to build decentralized apps, allows you to host smart contracts, and essentially is operating as a decentralized network or a decentralized internet. But we all know what Ethereum does. I don't need to spend too long explaining what Ethereum is to you guys because I know by now most of us are aware that it is one of the primary Layer 1s. Of course, off the back of that, Ethereum has exhibited some of the strongest growth in unique addresses. We've seen a daily increase of around 70,000 new addresses per day. If we compare this to most other blockchains, something like a Near protocol does a 10,000 per day. Something like a Phantom does 5,000 per day. AVAX, 8,000 per day. Ethereum comes in roughly 10x that at 70,000 per day because it is usually the primary option on many exchanges for bridging tokens in and out of wallets. It's the primary option on MetaMask. It's considered by many people to be one of the safer networks to use. It did transition to proof of stake, but I don't think that sentiment has changed. So that's one of the main reasons why people do prefer to use the Ethereum chain. Now, what is happening for Ethereum? Well, Ethereum is very interesting because it launched in many ways with tech that was considered unfulfilled or unfinished compared to a lot of other protocols. So what it needed to do, exhibited by the merge, which was the transition from proof of work to proof of stake, was change its consensus mechanism in order to achieve the scalability that it needs to achieve because Ethereum became very slow and very clunky. So we can see that we are currently in a 5-step phase to upgrading the Ethereum network. It started with the merge, which was complete. Then we have the surge, which includes sharding to achieve scalability. Then the verge, which is essentially implementing Verkle trees, which is a storage solution. Then the purge, which eliminates bad debt. And then the splurge, which is, all those extras that everyone wants, like ZK Snark and improvements to the EIP 1559. So this is the roadmap forward for Ethereum, and we are currently in the process of doing that currently. So what are the advantages to Ethereum? And what are the disadvantages to Ethereum? Well, the major advantage is its first mover, meaning that it was the first L1 to launch, and it's the gold standard in many ways. So it's the one that most people tend to gravitate towards, and new users and new projects tend to build on Ethereum because it's EVM compatible. Obviously, it created the Ethereum virtual machine, and it's a very popular and hugely backed L1. Secondly, it has institutional investment. So unlike a lot of other Layer 1s, Ethereum actually has huge inflows because after Bitcoin, if you're a hedge fund and you want to invest in crypto, you're probably going to look to Ethereum next because it gives you that upside, that genuine network effect that Bitcoin doesn't. But you're also not exposing yourself to the insane amount of risk that some of the L1s lower down the list expose you to. So a lot of institutions, I think, favor Ethereum as an investment. And obviously, it does have that big community. And as I said, it's favored by many projects from a development standpoint because you build it on Solidity. If you develop on Ethereum, you can deploy on other EVM-compatible chains. It becomes very easy to bridge your DApp over, hence why it's easy to build on Ethereum as a developer. But there are disadvantages which give the other L1s wiggle room. The first one is that you could argue it's outdated tech. They have to go through this massive roadmap of upgrades just to get to the point that some other blockchains are already almost towards. You could argue that some of the other major blockchains are already 3 or 4 steps ahead of Ethereum because they launched with more adaptable tech. Think about it. Ethereum launched proof of work. It needed to transition to proof of stake. And now a lot of these changes can only now be implemented. A lot of the other L1s, they launched on proof of stake 3 years ago. They've already had 3 years of trialing and testing method with new technological innovations to actually pioneer a path forward. That's something Ethereum didn't have a chance to do. Secondly, that path to scalability is quite long, and I think this is probably the main concern, that other chains may gain market share in the interim to Ethereum finally getting to its end goal. So this is my thesis as well. My thesis is that the future of crypto is multi-chain, meaning we're going to have multiple layer 0 and L1 ecosystems that comprise the overarching crypto infrastructure. And that means that in the meantime, to Ethereum achieving the scalability that we think it can achieve, there will be other L1s that come to fruition and that take up significant market share as their ecosystems develop. Now, let's have a look at some of them now and go through the next few biggest L1s. Just before we get into the other L1s in today's video, remember, we are doing a very cool $1,000 trading bonus. So if you haven't traded futures before on a ByBit account, I highly recommend clicking the link in the description and signing up for a Banter ByBit link, because if you deposit $1,000 in your derivatives account, you get a $100 for free that you can essentially use to trade either a 10x trade on ETH USDT, a long or a short. So if you haven't traded futures before, I recommend signing up. It is up to 1,000. So the more you deposit, the more you get. You could simply just deposit and then get your airdrop and then withdraw afterwards. So link in the description for all the links to that airdrop if you're interested in getting some free USDT airdrops so you can trade. Let's get into the rest of the show. Number 2 is BNB. BNB has grown significantly over the past few months, and honestly, over the past few years, as Binance has established itself as the premier exchange. Interestingly, if we look at BNB as a token, it is down 58% from its all-time high. If we look at Ethereum, it's down 72% from its all-time high, and so is Bitcoin. So in terms of relative strength to the rest of the market, BNB is actually one of the strongest performers. It's been extremely impressive compared to other chains. And this is off the back of it being extremely fast, extremely easy to use, and having on-ramps and off-ramps from the Binance exchange. So one of the first usages the Binance coin has is the growth from the Binance exchange growth itself. So the asset first started purely as a vehicle to raise funds for the Binance exchange. They gained significant traction as an exchange following 2017, and then they grew from an exchange platform to more of an ecosystem under the Binance branded umbrella. And since then, we've seen Binance actually launch the BSC, which is the Binance Smart Chain, using BNB as the primary utility token. So a token which didn't have much utility was suddenly given additional utility, and now users can use BNB coins to pay for transactions on the Binance exchange. They can also do so to pay for transactions on the decentralized exchanges, because you can use BNB as a network. So I think it's important to distinguish here the BNB use case on the exchange side of things, and then the BNB use case on the decentralized side of things. Now, on the decentralized side of things, if we do look at the exchange, the token growth, we can see that the unique address chart is basically parabolic. It gets over 260,000 daily increases in new addresses, some days clocking over 400,000. We looked at Ethereum before, and that came in at around 70,000. So roughly a 4x growth compared to Ethereum for Binance addresses. Why? Because the exchange does a very effective and efficient job of onboarding new users. And that is one of the main reasons why the BNB token has not dropped as much as other L1 tokens, because it has centralized usage to underpin its growth, and it doesn't only operate in a decentralized fashion. Now, this can be a positive and a negative. The transactions have decreased as less people have been using the DEXs, less people have been using the dApps in the Binance ecosystem. However, we can still see that a 3 million daily total transactions is pretty high compared to Ethereum at 1 million, near protocol at 400,000. It still is, superseding a lot of these other protocols. And as I said, that's largely due to the exchange growth. But BNB does have a few unique advantages. Now, if we look at its speed, we can see its block time averages 3 seconds, and its time to finality is 75 seconds. This puts it slightly higher than other chains. I wouldn't say it's the most efficient chain in terms of a pure L1, but it certainly is fast, and the fees are certainly low, and that is one of the major advantages of the Binance Smart Chain network. If we look at the true TPS, so this isn't the gold TPS of 200,000 that you see floating around on social media. This is the active TPS in practice. We can see that the Binance Smart Chain is the number 3 ranked at an active TPS of 33.06 seconds, so it is fairly fast. And I did a thread on the reasons why I'm bullish on BNB in general. If you want to check that thread out in the description, basically the summary of it is you're killing two birds with one stone. You get that exchange side growth, and you also get the growth from the L1 itself. So I'd say the advantages are the relative strength that the chain has exhibited, only down 58% as a token compared to Ethereum and Bitcoin, down 72%. You have CZ, one of the biggest figures in crypto that's actively backing and pioneering the Binance platform. That is always a plus, having a guy like CZ on your side making connections. As I said, the exchange side value capture is big, it's fast and cheap, and it has easy on and off ramps to Binance, which means the more people that sign up for Binance accounts, really, the more people that will need to use the BNB token, as it is one of the major tokens underpinning the exchange. But also, if people wanted to easily off-ramp and on-ramp onto the exchange, it is pretty cheap to use BEP20, and that's one of the main value accrual mechanisms for the BNB token as gas is burnt. Disadvantages, I'd say a lack of distinct competitive advantage. What this means is that the tech isn't particularly impressive compared to other chains. As an L1 itself, it's relatively centralized. It doesn't have those fancy sharding mechanisms that other chains have. It doesn't have subnets. It isn't the most complex architecture. Now, that's a positive in a way because simplicity wins in crypto a lot of the time, but it's a negative in a way because it doesn't have that real selling point that can get it to the point of hosting millions and millions and millions of users later down the track yet. But we know Binance has deep pockets to implement network upgrades, so that maybe isn't a concern. And then the third one I'd say is probably reputation. If we look at DeFi Llama and we look at BSC, we know that the Binance Smart Chain is rife with scams and rugs. Now, this is just a little bit of a reputation that Binance has built over the last year or so, because a lot of projects, a lot of Ponzi DeFi protocols decided to launch on Binance, similarly to how they launched on Phantom, because it was a cheap, easy network to onboard to, and it had a decent enough community. So I think this has kind of hit the perception of BNB a little bit, but it does have a lot of projects on it and a lot of good projects as well, which is one of the main reasons why it's got 475 active protocols compared to other exchanges, which, I mean, even the biggest L1s, Polygon, only has 315 protocols. BSC is an L1, almost has as many as Ethereum, so it's quite big. All right, on to the next one. Cardano. This is number 3. This one's divisive for some reason, and I definitely see why, because there are some very clear positives and advantages for Cardano, and there are some very clear negatives for Cardano. One of the major positives is that its circulating supply is almost fully diluted, unlike some of the other chains, which are still relying a little bit on emissions, like Solana, with some major unlocks coming next year. Its market cap, though, is one of the causes for controversy, I guess, online, because it has a very high market cap at 14 billion. So when you're commanding a market cap that large, you typically have to have some pretty strong metrics to underpin that growth. So essentially what Cardano is an open source smart contract platforms aiming to provide multiple features through a layered design. So it has modularization, which eventually allows for delegation, sidechains, and light client data structures. This is the interesting part. Cardano is an open source blockchain originating from peer-reviewed academic research. Cardano does not have a single published white paper, but is developed from a collection of academic papers. So Charles Hoskinson and the Cardano Foundation have taken a very unique approach here to Cardano. They are essentially using a collection of academic papers to build the Cardano network and to verify what they want going forward as a path to scalability. Unlike other chains, which were quite well thought out in their design and launched with an initial white paper, Cardano is slightly more adaptive and relies heavily on research from PhD students to verify what Cardano is aiming to do. And we can see here, if we look at the stats, I mentioned before that Cardano had a $14 billion market cap, which is quite large. And I wanted to look at it if its stats can really verify that. I mean, the clear answer is no. So Cardano only has, if we look at chains, in fact, it's so far down the list, you can barely see it, 12 protocols, right? So it doesn't have that much development on the chain in terms of protocols that have actively launched. If we look at the new wallets per day, it's recently increased to 15,000 per day, but I mean, BSC was 300,000, Ethereum was 70,000. If we look at transactions, it has really increased after the Vassal hard fork, which was the latest network increase, but it's still only 700,000 per day. I say only, that's a lot, but Ethereum's 1 million, Solana's 3 million, BNB's 3 million, so it comes in slightly lower than that, and its payments per day is roughly a third lower than Ethereum as well. So most statistics, you would go to suggest that Cardano is probably not on the same level as some other chains. I don't think it's quite clocked on the TPS speeds yet because it is still relatively new in terms of having smart contracts deployed. And I guess this is the major negative to the chain, that it doesn't have that many dApps deployed. So if we look at the Cardano ecosystem as a whole, it has not gotten to the point where it has many quality dApps. And I guess this is the main issue I've had with Cardano, and the main issue that a lot of people have had with Cardano is the lack of decentralized applications that are built on it. Now, can the tech be good? 100%. The tech, I think, should be very strong. The only thing is it's hard to know, right? So you're essentially betting on a $14 billion project where it's a little bit hard to know what lies in store for it in terms of development, but also in terms of what their exact path forward is, because it doesn't have that clear white paper. It's a little bit murky. Now, obviously, there's many details out there from Charles. There's by no means shady, but I don't know. I just have issue with the valuation, I guess, if I'm thinking critically. But if we want to think more objectively, you do have the data that you can use to weigh up against other protocols. But I'll be objective. I'll be very objective about ADA. It is very well researched. It's not rushed at all. So they've taken the slow approach to Cardano. They didn't want to just rush onto the market like other chains. They really wanted to take their time and get it right. And that's why we see the testnets taking so long to execute. It has a solid tech on paper. From what I've seen, it can be quite an adaptive and scalable network. We just haven't seen it in practice. So that's the only if. Then again, many other L1s, we haven't seen that in practice either. So when you're betting on ADA, you're betting on the pursuit of technology, in the sense that you're betting on, in the future, the technology being good, not necessarily betting on it being good right now. So you're betting on future growth, which is essentially what you do if you're investing in a stock on the DCF model anyway. And it's essentially what you're doing investing in Ethereum and Bitcoin anyway, because you're relying on future adoption in order for the price to go up. And it's very similar with ADA. If you're investing in it, you're relying on future adoption. Now, how you conduct your research and your investment methodology is up to you. Personally, I prefer to go for projects that have more runs on the board, more of a developed ecosystem. I prefer to take less punts because I believe that it lowers my EV if you have less substantial metrics to base your investments off, if the market cap is above a certain threshold, which I think Cardano probably is. But as a religious community, it has strong development. So if we look at sentiment and we look at development activity, Cardano is actually the third most developed on chain. So I guess the major argument here is that although it doesn't have many dApps right now, in the future, it will. And that will slowly start to show itself as some of this development reflects as active dApps and applications. Disadvantages, I think I've talked about them throughout my example of Cardano here, but it has been extremely slow to launch. That is the main negative. It has been around for years and years, and it's had delays and delays, and there's not many applications, so it becomes hard to value. Lack of innovation, potentially. We don't know. We can't really verify this until Cardano has more dApps and we actually see how it works in practice under stress. We've seen how Solana works under stress. It's failed many times, but we've seen how it operates. We haven't really seen that so much for Cardano yet. And obviously the main negative is probably the relative valuation. Because if Cardano came in at a $3 billion market cap, I'd be glowing. I'd come in here and say how amazing Cardano was, because the tech, compared to a valuation of $3 billion, is probably a pretty good move, right? But at a $14 billion valuation, you have to start to think a little bit more critically and be a little bit more picky with the potential upside. So yeah, that's my thoughts on Cardano. The next one is Solana. This is also a controversial one lately, which is interesting because I've always thought the Solana tech was quite good. And I also think it's quite reasonable at a $10 billion valuation. But there are definitely some concerns that have come from the recent outages. So let's run through exactly what has gone down on Solana and what it aims to do. So Solana is unique. So it uses a unique proprietary consensus mechanism, which is proof of history, which essentially orders transactions based on the event that singular transaction occurred in. So it stacks blocks horizontally and uses a proof of stake consensus algorithm to secure that mechanism. So Solana is very interesting because it is essentially a single global state, meaning it hasn't built to fragment liquidity. So it doesn't have subnets. It doesn't have side chains. It doesn't have EVM chains that are branched off Solana. Solana is Solana, and Solana is its own ecosystem, and it's built on its own development language. It's not EVM, and it has built a very loyal community off the back of that. So Solana is quite unique because we do see the fragmented liquidity approach from many other protocols AVAX being one of them, Solana has decided to go a completely different route. So the Solana network itself has had some unique advantages from that. And the unique advantage it's had is building a very loyal community. And that loyal community clearly is loving the NFT markets. And that is the major selling point of Solana right now. It's NFTs and gaming. And if we look at the number of active addresses on Solana, it's mind-blowing. So when we look at what chains actually have tangible metrics to underpin growth and to justify their price tags, I mean, look no further than Solana. It does have some of the most impressive statistics in crypto. There are caveats to stats, though. Stats are just numbers. There are always many caveats, and that does affect the valuation. The first one being, well, if you're an NFT chain, then there's going to be a lot of mints. There's going to be a lot of ghost transactions, and that is going to artificially inflate numbers. And that has definitely happened for Solana to some extent. Compared to if you're a pure DeFi chain, it probably becomes harder to reach 1 million transactions a day than something like a Solana has. But that's also a testament to the community that it's built, and that's also a testament to the network speed. It's very cheap and very fast. So if we look at the data, Solana comes in as the top TPS chain. I'll zoom in a little bit so you can see better. 426 transactions per second actively. So we know that it has a goal of 100,000 TPS, just like many of these other protocols have. We know Phantom wants 100,000 TPS. So does Ethereum one day as well. But in practice, it's very different to in principle. Solana at the moment exhibits a 426 TPS speed, making it currently the fastest network that is available to use right now. Now, yes, that speed has come at a cost, and that speed has come with major downtime events. So although it's been fast, we've seen 8 network outages over the last 2 years, which is the most outages of any chain. And that does raise centralization concerns. But you have to remember that the Solana approach has been to go to market, break shit, see what works, see what doesn't, and correct course along the way. Now, there's nothing inherently right or wrong about this approach. Cardano's taken the opposite approach. They've taken a long time to launch. They've had barely any issues, but they haven't gotten adoption. So Solana has basically said, let's fail, but let's fail whilst getting the most amount of users possible, and let's go to market as quickly as we can. Whereas something like Cardano has said, let's not do that. Let's not go for users. Let's go for tech and hope the users come later. So 2 very different approaches. What is better and what is worse is completely up to your discretion. Personally, I do like the approach Solana has taken, honestly. I just like the fact that they are really actively trialing things in the space, trying to improve upon old network upgrades, seeing what works, seeing what doesn't. And although it has put a huge damper on the social weighting of the protocol, given the fact it isn't liked by everyone after all these network downtimes, I still do like Solana as a network, and I still see a very clear use case. And when we look at L1s, there has to be clear use cases. So you have DeFi ecosystems like BSC. You have primary L1s like Ethereum. You have AVAX, which has given itself an advantage due to the subnet architecture for gaming. I think Solana is the NFT platform. That is essentially its major strength. And does it have DeFi? Yeah, it has DeFi. And it has a strong DeFi ecosystem, to be honest. Coming in at number 6, 1.3 billion TVL, just after Polygon, has some good dApps, but it has a very, very strong NFT ecosystem as well. So it has a unique advantage in the network. And we've seen this extrapolated in the NFT data as the volume has increased of 7% of Ethereum's volume to 24% of trading volume, or actually of the total NFT trading volume amongst every chain. And we can see on Crypto Slam, Solana is now 1/4, actually less, roughly a third of the Ethereum NFT sales volume in the last 24 hours. So it's been quite resilient in its NFT ecosystem as well. And I do really like Solana for that reason. So it's fast, it's scalable. We can see it. We know it's fast because this block time is 590 milliseconds, much faster than BSC. Its orca trades per second was 273. We can see that right now it's clocking 426. And then if we also look at its time to finality, it comes in at just a few seconds. So it is an extremely fast chain. 13-second finality. It has optimistic confirmations, but these are only resistant to a 4.7% corruption. Most apps accept this threshold instead. So it is hard to calculate the numbers. If you want the exact number calculations, this article is from Dragonfly Research. It's called the AMM Test, No BS Look at L1 Performance. They do have their own way of calculating TPS and time to finality. There isn't some objective way at looking at it. It is relatively subjective due to the nature of TPS, but it is a good article nonetheless if you want to look at it. So the summary of Sol, huge NFT community, strong metrics, heavy backing. We know it's very heavily funded, especially by SBF, and it is single state. So it doesn't fragment liquidity, meaning it doesn't have subnets where liquidity is diverted. Disadvantages, downtime. It's a rushed product objectively compared to some of these other chains. Reputation has taken a hit as a result of that. And although it being non-EVM compatible is a bonus in the sense that it builds its own ecosystem, it's a negative in many ways because we've seen many protocols that have launched on Ethereum or launched on other L1s on the EVM compatible chains that haven't wanted to launch on Solana because it's its own ecosystem. And it becomes more difficult because you need to program in a different language and it just makes things slightly harder to onboard. So it's a positive being non-EVM compatible. It's also a negative. So I think the major disadvantage is the downtime. Can they fix their product? I still have faith they can, but it is definitely a risk. It's definitely a headwind as well for the Solana network. So those are my advantages and my disadvantages. But if you have any advantages or disadvantages I've left out in the comments for any of the chains I'm talking about today, let me know in the comments. I'd be very interested to hear. And by the way, while you're here, before we get on to Avalanche, which is the next L1, make sure to smash the video, smash the like button. If you guys are enjoying these ultimate guides, I want to do more of them in the future. And make sure you're subscribed as well. If you're a new viewer, make sure you subscribe to the channel. We're live every single day, giving you crypto wisdom and education. So subscribe if you're not subscribed. And let's continue to get on with the video. So we have Avalanche next. Avalanche is very, very interesting because it relies on a subnet architecture. So it's an open source platform, just like Ethereum. It's for decentralized dApps, blockchain deployments. But the slight difference is that Avalanche is going after a very interoperable and scalable ecosystem. Now, the way they achieve this is through private or public subnets, meaning if you're a project and you want to build on Avalanche, you can build on the mainnet, which is the AVAX C chain, or you can have your own subnet, which is a subnet which is secured by the original Avalanche Snowball consensus mechanism, but you get the benefits of being able to use your own token as gas on that subnet, being able to get the scalability advantage. So AVAX is able to divert traffic off the main network to the subnetworks, and this allows the subnetworks to infinitely scale. Because Avalanche can have, I mean, I wouldn't say it's infinite yet, but I guess the end goal is to have as many subnets as you like and have many other L1 chains with their own dApps and their own ecosystems built under Avalanche's overarching architecture. And that is essentially what Avalanche aims to do. Scalable, interoperable, achieved via subnets. Now, Avalanche has been one of the strongest performers in terms of its DeFi ecosystem. It's currently the fourth highest network for TVL on DeFi Llama. It had a $12 billion total TVL, but now it has taken a big hit. Now, the reason it's taken a big hit is because unlike Solana, that's mostly NFT driven, or even BNB, which is driven by the exchange side growth, Avalanche was very incentives driven, and it was very driven by DeFi because there was this period called Avalanche Rush that you guys probably remember where the emissions were crazy across Trader Joe, Aave, Platypus. We had so many emissions for the Avalanche network that there was a huge incentive to stake on Avalanche. Pangolin, Benki. You guys remember, it was absolutely nuts. Like you can earn 40, 50% a day because you were just being shoved emissions down your throat, just given free tokens. Because that's cooled off, and because many projects are pivoting to real yield, which I think has been a good shift, by the way, in terms of the DeFi landscape, we have seen a major cool off in TVL, and it has significantly hurt AVAX's price, but also sentiment, because we've seen quite a large decline in hype, and that is evident via the social metrics. It's quite quiet on Twitter relative to what it was during the bull market, as most chains are, but specifically AVAX and Phantom, those real DeFi-specific chains. And it's also raised question marks as to what AVAX's unique advantage is. So if we do look at the C chain active unique addresses, we can see that it isn't growing very fast, just as I alluded to before. Only 2,000 per day new addresses. Daily transactions have nosedived on the C chain. However, it's important to note that a lot of the traffic was diverted to subnets. So if you include subnets, which were DeFi Kingdoms and some of the other ones that launched not on AVAX, like Crobata that got its own subnet, then the total transactions is closer to 500,000 a day, but it's still half of what it was in the bull market. That is to be expected, though, when it comes to blockchains in the bear market. It's expected that usage goes down as some of the hype and rudimentary usage that you got from a lot of those retail users diminishes. But it is still a very used chain because 500,000 transactions isn't something to snuff at. So we look at AVAX's speed compared to some of the other chains. It is a little bit slower. And it honestly, just anecdotally from usage, it was a little bit clunkier during periods of congestion than something like a Solana. It does have a very quick time to finality. It has a 1.75 second time to finality after a block is produced. I think, by the way, guys, time to finality is a more important metric than transactions per second. Transactions per second is very arbitrary in many cases. It's about performance and it's about how a network can handle stress. And AVAX's time to finality is very good. Its block time is also fairly good at 2 seconds. Solana's slightly better, but 2 seconds is still fairly good. Trader Joe did 31.65 second TPS. If we look at the real TPS timings at the moment, we could see that Avalanche comes in at 1.65, so slightly lower than that. But as I said, it depends on network conditions, and this real TPS site may not be updated. As I said, TPS can be very arbitrary at times. So AVAX has a few advantages. It doesn't have first mover advantage. That's the Ethereum one that I've left in there. It has a large institutional backing. It's backed by a lot of VCs. It does have quite a big community, although this is smaller. I would actually replace this. I would say its DeFi focus is a huge advantage. It has many great applications. It's EVM compatible. That's another advantage. But I guess its main advantage, the main competitive one, is the scalability via subnets. Its subnet architecture means it can be quite scalable in the future. And I guess that is its main advantage. But that advantage becomes a disadvantage because subnets fragment liquidity. So if one of your main value accrual mechanisms for your token, in this sense, the AVAX token, is going to be gas fees, then if you do have subnets that launch with their own tokens used for gas fees, then it is only realistic to assume that that will fragment liquidity off the main chain, resulting in a lesser burn for AVAX tokens. And that is my number one disadvantage with AVAX. The subnet architecture is strong because it means it can be scalable and secure. What this means is that subnet, so if you're a developer and you want to launch an application on AVAX, you need to lock up AVAX tokens, right? So that's an advantage because that is reducing the circulating supply of AVAX. But I still feel like the amount that is being locked up, which I think is around 100,000 AVAX, but you'll need to fact check that, that is significantly less than the expected burn of a popular chain would be, which is a disadvantage because it fragments liquidity off the C chain. And if liquidity is being diverted off the C chain, then the AVAX token's exposed to less of a burn, which we have seen because the C chain has significantly reduced in transactions. And in my opinion, there's much more of a benefit to transactions being conducted on the C chain as opposed to subnets. But if it didn't have subnets, then AVAX would have no unique advantage and it would just basically fade to oblivion because it wouldn't be usable. So it is a unique advantage that it has to come with a negative, and I understand why. I have a controversy and reply guy in here because of the whole LaRoche scandal. There is a little bit of a legal headwind with AVAX. Now, I don't think this is necessarily going to come to fruition, but I think it has hit sentiment, and that is the accusations that AVAX had issued lawyers to take down other chains and had acted vindictively. They have dismissed his claims, by the way. Emin, the founder of AVAX, dismissed them, but I do think it still adds a little bit of murkiness because if a percentage of those claims were to be true, then that would add a little bit of doubt in my mind as to the credible practices of the AVAX team. I'm not saying they have. I'm just saying there's enough of a doubt there to put it down as a negative. And also, reply guys there because I don't know if you guys go on Twitter, but in my opinion, the AVAX team has been a little too focused on replying to tweets and spreading negativity than it is on building a quality project. Now, I'm not going to go too much into this, but the AVAX team, they like to tweet, and it's just a little bit off-putting. When I say like to tweet, I don't just mean tweeting, because tweeting's great, keeping up to date with your community, but they are kind of reply guys sometimes, I'll be honest. They do have some snarky remarks, and if you guys remember, they came after the Polygon team a few weeks ago, and they're just very focused on what others are doing, in my opinion. Now, this is obviously just anecdotal based on my experience, but I think a few of them are reply guys, and that's just my opinion. So it might not be a disadvantage for you. In fact, we'll get rid of it, but it's a personal disadvantage, and I thought I would give my personal disadvantage and add that to the list, as I have with other projects as well. Now, the last one is Near Protocol. So I said in today I was covering the top 5 and doing a comparison between them. At the end, I will tell you which one I think is best in terms of upside. Near Protocol comes in at rank number 5 of the L1 list, because I'm leaving out Polkadot, Atom, and the layer zeros, because that is a separate video, because I view them very separately, and I view Matic very separately to L1s. So this isn't my top 5 in terms of what I like. This is my top 5 in terms of market cap, and I'll tell you what I like at the end. But Near Protocol is very unique. Why? Because Near has sharding, or very soon to have sharding, and Ethereum is getting sharding in roughly 2 years. So Near Protocol has what Ethereum wants in 2 years' time now. And essentially, it achieves this through its sharding design called Nightshade. So, in my opinion, based on the research I've done, and bear in mind, I'm not the most technical person. I do have technical proficiency in terms of what works as an architecture, but I don't really understand the blockchain the same that an active developer would. So I'm not qualified in many senses to give you my opinion on the tech. But from what I have seen technology-wise and the research that I've personally done, I believe that Near Protocol has some of the most impressive tech in crypto, if not the most impressive tech in crypto, because if it can nail sharding, it will be the first chain that has actively been able to do so. And that gives it a huge advantage in terms of scalability. But I think also the key thing with Near Protocol is that it is very UI focused. So their focus is to onboard users. And that's why they have these massive incentives programs, because Near Protocol wants it to be a very user-friendly experience. They have this philosophy that the only way to get mass adoption in blockchain is going to be appealing to retail via mobile applications, via easy-to-use and intuitive web applications that aren't clunky. Because to date, we've seen many clunky apps on some of the major L1s. Near Protocol is aiming to accelerate the application development and onboarding process with very user-friendly design features. So the way to summarize Near would be sharding and UI friendly. That's the easiest way that I could think of it, but the tech is very good. And as I said, it has done a lot of raising. It raised 350 million, which was its second 9-figure raise in 2022. So it's almost raised $1 billion, putting it in the top 3 blockchains for funding. So it's massively funded, massively funded. It has an $800 million global ecosystem fund. Last week, it recently launched a $100 million gaming and metaverse fund. So if we're going to argue in terms of who has the deepest pockets, Near Protocol would be very, very, very up there. Ethereum, probably still ahead because it has the most developers, and the Ethereum Foundation is massive, and it has the largest market cap, so it has the most ecosystem funds to draw on. But in terms of new active inputs, I would say Polygon, Near, and Solana are probably the 3 most heaviest backed. I may have missed a couple, but that's just off the top of my head. So you definitely can't deny how important funding is going to be in terms of getting those developers to use Near Protocol, because the more developers that you can get, the better dApps you can create. The better dApps you can create, the more users you can accrue. The more users you can accrue, the more the chain's value will accrue. That's how the network effect works, right? So Near Protocol becomes exciting because of its backing. And when Near first launched, I'll be honest, I was skeptical. I was kind of like, another chain, sharding, this, that, interoperability, like all the buzzwords we hear time and time again. But as time has gone on, and as the market has actually quietened, what I'm hearing out of the Near Protocol camp, what I'm hearing from developers at Near has been very impressive. It has been so impressive that Near has entered my top 3 holds in terms of L1 holds in the market. Someone asked what my comparison to Solana would be with Near. I'd say they're pretty comparable, but Solana has the more users. Near is roughly a fourth of the market cap. So upside, you could argue Near has more. Solana has a lot more users though. So based on current metrics, Solana's definitely ahead, but Near Protocol does have big pockets and deep pockets, and it also has that UI focus, which I think could put it in good stead if they can nail sharding. In terms of transactions, it does roughly 500,000 transactions per day. As I said, Ethereum does 1 million, Cardano does 600,000, so it's doing the same as Cardano at a fourth of the daily number of transactions. The number of new accounts is 40,000 per day. BNB was 300,000, but Ethereum was 70,000, AVAX was 3,000, and Cardano was a few thousand as well. So Near Protocol is pretty up there in terms of new accounts. So they're doing a pretty good job at onboarding new users. Near also, like Solana, operates with its own proprietary language and also chain. So it doesn't fragment liquidity like an AVAX would through subnets. You just have Near. It's not EVM compatible, which is a disadvantage and an advantage. But it has very good tech. It has big funding. It has the focus on UI. And I think the biggest positive for Near Protocol is its valuation. 2.8 billion is not a crazy valuation. If we can compare that to Ethereum at 150, I mean, that's a massive upside. That's almost like a 50, it's like a 75x. And if we compare it to Solana, it's like a 3 or 4x. If we compare it to AVAX, it's a 2x. So it's still reasonably valued, I should say, in terms of other L1s. So that's one of the reasons I like Near. Smaller ecosystem is a disadvantage, so it doesn't have a crazy amount of dApps like some of these other protocols have. If we look at DeFi Llama and we look at Near Protocol, we can, in fact, is it even here? No, Aurora's here. There we go. It's 15 after Carver. You can see that it does have 9 dApps, but it's not many, so it's relatively new, and most of the liquidity is on Ref Finance, their biggest AMM, which I do like, by the way, but it has been resilient, only down like 30% in its 40% in its total TVL, but it still doesn't have the huge, crazy ecosystem that other chains have. Why is this the case? Very similar to Cardano. The reason Near doesn't have a huge ecosystem is because it was built later. It's a newer chain, launched in 2019, actually mostly 2020, and it just hasn't had time to build out that ecosystem yet. Non-EVM, as I said, it does have Aurora, though, which is the EVM-compatible chain built on Near, so that doesn't capture value for the Near token as well as transactions on the main chain, but it certainly is a plus, and it does help having Aurora as the EVM-compatible chain. And I guess another disadvantage is, yeah, it's got crazy funding, but funding doesn't necessarily equal users. Funder just helps with development to get the users. So it's an indirect way of getting users. It does usually work, but it's no guarantees. So if the team can nail the tech, it's very good. So what can we take from this video? Because it's a long video that covers the 5 biggest projects. I guess the major overarching takeaway here is you have to determine your parameters based on your risk profile. Personally, I like Solana and Near out of this list because I believe based on what we've seen in terms of exhibited growth versus upside, those are probably the higher upside plays. AVAX, I'm a little more skeptical of. I'm not the biggest fan. Of course, you have to make your own decisions based on the information available, but I'm not personally that interested at the moment in adding to my AVAX positions. Cardano, if it pays off, it can work, but I think the valuation's pretty high relative to other chains, and that would be enough to scare me based on what we've currently seen. BNB, I almost view BNB as probably the best token in terms of relative strength because this thing just does not go down in terms of the same amount that other tokens go down. I mean, only 58% compared to 72% for Ethereum and Bitcoin is quite palatable, and that's one of the reasons why I think I'd be more comfortable holding BNB. And then Ethereum, obviously, that's, in my opinion, a pretty safe hold, having massive institutional inflows compared to some of these other L1s. So it's very interesting looking at the list, and there's certainly something to be said for investing down the list. But at the same time, the further down you go, the riskier, the higher your risk profile. So if you're investing on like a 5-year time horizon, you obviously want to invest in projects that you know are going to be around. And to do that, you want to invest in the ones with the big backing. And the ones with the big backing typically have higher market caps. But if you're investing on a shorter term time horizon, then that matters a bit less. And what matters more is what has upside if you believe we're in a period of upside. And that would involve some of your other cheaper L1s, for example, Phantoms that have those lower market caps that can exhibit stronger returns, but do obviously have more inherent risk. So it's going to be up to you to determine which ones are your favorites. You guys know Solana and Near and BNB, all ones that are in my portfolio that I've been sharing with you guys. Ethereum, great project, of course. Cardano, great project. Maybe not a great valuation, but I think it's a great project. Avalanche, very good architecture as well. So none of these are crap projects, right? You're investing in quality projects with any of these, but they're all going to depend on personal preference a little bit. So I hope you did enjoy this video. I hope you learned something. And if you guys want to see more of these comparison videos, I will do so in the future. Hopefully not quite as long as today's, but I think today's was an important one to kind of frame the L1 conversation for you guys. So let me know if you enjoyed in the comments below and if you want to see more of this in the future. And yeah, I will see you in tomorrow's show at the same time. Peace out.